Hello and welcome to another Diwali video. Today I'm taking an in-depth look at Microsoft Corporation, ticker symbol MSFT. We'll dive into the financial metrics, assess the company's growth, and ultimately try to find its fair buy price. Microsoft Corporation is an American multinational corporation and technology company headquartered in Redmond, Washington. Its best known software products are the Windows line of operating systems, the Microsoft 365 suite of applications, the Azure cloud computing platform, and the Edge browser. Its flagship hardware products are the Xbox consoles and the Microsoft Surface personal computers. The stock is priced at $432 with a market cap of 3.2 trillion. Now let's dive into some key valuation metrics. The price to earnings ratio stands at 36.6 and the price to cash flow ratio stands at 27.1. The median PE over the past 10 years was 30.5. Over the past 5 years, the company's revenue has grown by 71.4%. Its bottom line has increased by 99%. In terms of earnings per share, there has been a growth of 104.9%, and notably, the number of common shares outstanding is 7.47 billion, a minus 2.8% change for a period. Now let's assess the company's liquidity and solvency. The interest coverage ratio is 46.7, which indicates the company's solid ability to handle its debt obligations. The quick ratio, a measure of the company's short-term liquidity, is 1.27. This is a very good amount. This suggests that the company has a big ability, a powerful ability to handle short-term shocks. Additionally, the long-term debt-to-equity ratio is 0.17 and the total debt-to-equity ratio is 0.19, both showing that they have a very low debt load. Shifting to the cash flow statement, cash from operations stands at 118.5 billion, reflecting a growth of 95.4%. Cash from investing activities is minus 97 billion with a plus 693.3% change. But a short note to add to this is that their cash from investing activities is huge this year, especially because of their investments in AI, because they own a big part of OpenAI. And basically, half of their in cash for investing activities, it comes from cash acquisitions, and the other half is capex. So I think this is not really going to last that much. This is until the AI bubble pops, but at least this year and the next 2 years, it's probably going to stay at above 60 to 70 billion uh, dollars. Next, let's move on to the financing to cash from financing activities, which is minus 47.7 billion, showing a minus 18% change over the same period. And capex, of course, has increased by 188%. Free cash flow has grown by 63.2% to 58.5 billion, but if capex hadn't increased that much, their free cash flow would have exploded. Uh, and I think this is not really that big of a problem because companies always have to invest, but I think the capex is a bit absurd. I mean, they're investing so much money and yet they're getting basically no return on investment. Moving forward, let's look at the return metrics to see how the company is utilizing its resources. The return on equity is 36%, the return on investment is 38%, the return on assets is 18.4%, and crucially, the return on invested capital stands at 23%. Finally, let's find the acceptable buy price. The first method is conducting a discounted cash flow analysis. By using a discount rate of 9%, a revenue growth rate of 8.5% for 10 years, and a perpetuity growth rate of 2%, we get a fair value of $282.4. Second, using a multiples variation of 20 times earning, operating cash flow, and 25 times free cash flow, get a fair value of $250. And finally, the honest price target is $496. Putting it all together, we get an intrinsic value of $142, and using a 15% margin of safety, we arrive at an acceptable buy price of $291.3. Suggesting that a stock at the current levels is overvalued. To wrap up my analysis, I rate Microsoft as a whole. This is not because Microsoft is not a great company, but this is because they're at a huge valuation. I believe that if they dropped to sub 350 levels, this would be an instant buy, but for now they're a hold. This is a great hold for people that bought in. I mean, I wouldn't really sell Microsoft. There's no reason to. They're a great company with great management. They're all they also pay a dividend, which is growing pretty fast over time. So maybe in the future they become a dividend aristocrat or king. So this is not really, this is a great company to hold. This is just a bit too pricey for me. Now, if it somehow doubled in price over the next 2 years, I believe it would be a sell because it doesn't really deserve the current valuations are a bit too much, and if it manages to push its price to cash flow to over 40, then it would be a sell because there's no point in holding a company that's that overvalued. They're of course, they've grown a lot and they still have some prospect for growth for the next 5 to 10 years, but the size they're getting, it's very hard to actually find new avenues for growth. So I believe that they're kind of reaching a plateau in terms of growth. Not yet, but maybe in the next 10 years. And to add to this, of course, is that this is a very weird value place since on the one hand, you could say that if AI isn't really successful, then they will not have a new avenue for growth, and this will be just the end of their growth phase and the start of their stagnation phase. But on the other, but you have to see it another way. If they stop investing in AI, they'll basically double their free cash flow overnight. So you're getting double the value for uh, the same price. So, but this is a bit of a technicality since if you really think about it, Microsoft still has a lot of avenues for growth. For example, in their Azure, sorry, I'm not sure how to pronounce it, but in their cloud business, they still have a lot of room to grow. And I believe that their future is a bit intact, and I don't think that AI will really be that big of a player in their future. If you saw recently, OpenAI showed their projections for future losses, and they're insane. I mean, they're planning on losing a few tens of billions of dollars in the next few years. I'm not sure Microsoft will sustain it that much, but yeah, I mean, if you believe AI is the next big, huge thing for humanity, at least the way they're doing it right now with generative AI, then Microsoft might be the best play. But now to quickly end this video, I place my buy price at 350 and for now I rate it as a hold. Thank you for watching. If you found this video helpful, please like and subscribe for more deep analysis and see you in the next video. Bye.